What's up, everyone? It's Scotty with MoneyVest. So markets here recovering a little bit intraday, so pushing higher after the sell-off, after the gap down. S&P and NASDAQ were down a little bit over 2% yesterday, but of course intraday we did see a very strong momentum back higher, so we did make a lot of higher highs and higher lows intraday to push back higher, but at the same time we were not able to break out of certain resistance levels, as I've already discussed in my previous videos as well. So hope you all enjoyed this video and find it helpful. If you do, please make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including my 30 stock shopping list and with buy targets and intrinsic values as well. So links going to be down below. There's about 4 more days left if you're interested in joining, with a few limited spots, and of course a 16% annual discount that's also available until the end of this month. So this right here was the overall trend on the S&P and the NASDAQ. You can see the S&P down about 46 basis points, the NASDAQ down 64 basis points, the Dow was down almost 1%. So a little bit of rotation out of Dow over to NASDAQ and the S&P 500 once again. And this was the overall intraday chart of a very nice higher highs and higher lows, and pushing higher after the gap down on the back of a Meta earnings as well. Now this right here is what I mentioned in our community. So this is part of the text analysis that you can also get as part of our membership on Discord. You can see a nice little bit of recovery intraday on the NASDAQ. Still a long way to go. We're still not out of the woods yet. And that's exactly what I emphasize on this video here, that we're not out of the woods yet. Huge resistance test at 15.8 to 16K on the NASDAQ, and support at 15K. Still showing signs of weakness and making lower highs and somewhat lower lows on the market. I'd expect some consolidation here in this range before making the next leg lower, depending very much on future inflation readings, as well as rate expectations. And on the contrary, strong earnings could break it higher beyond 15.8 to 16K. So this is the overall chart on the NASDAQ, and you can see that we were, of course, making these lower highs and these lower lows. And then, of course, we broke down pretty aggressively and then rebounded a little bit and then sold right back down once again. So this is a very important level of resistance at 15.8 to 16K, aligned with that previous support level. And that is a level that I could see the NASDAQ kind of retesting here in the near future over the next couple of days. And like I said, a strong earnings print on the S&P could potentially break us out of this level, and the next target is going to be 16.4. But until that happens, very, very important resistance here. And if you do get a, let's say, a rejection here, then of course support level is going to stay put right over here down to 15,100 as well. Same thing is true on the S&P 500. So S&P analysis, support at 4950, resistance back up to 5,080 to 5110, and still showing signs of weakness and making lower highs and lower lows. Again, some consolidation is expected, because this right here was the overall downtrending channel on the S&P before breaking down even quite aggressively and then rebounding a little bit and now struggling at these levels. So this is going to be that resistance on the S&P. We're seeing a little bit of a recovery here intraday yesterday, but again, the time will tell if you're able to break out of that resistance again and somewhat recapture some of those other targets, such as 5150 to 5160 on the S&P 500 as well. So that right there is going to be that next levels to watch. More stock volatility is in the cards, but maybe not a correction. And this right here was BMO Wealth Management, Young Yu Ma, and he says, and I quote, "We expect more of the market consolidation instead of a correction. And the stock market doesn't need Fed rate cuts or even falling inflation, but it's also not in a robust position to quickly digest risks that could arise from accelerating inflation, increasing geopolitical shocks to the oil prices, or rising long-term interest rates as well." He added that the Goldilocks narrative of high growth and falling inflation could return within a couple of months, but it's also possible to have choppier markets that take time to digest its recent gains and allow fundamentals to catch up with valuations as well. All the positive catalysts are still here. AI has the potential to be the Internet of 2.0 and create another bull market. This was basically Jason Su, Chief Investment Officer at Reliant Advisors as well. So again, the market basically is trying to understand, it's kind of like in this dilemma whether interest rate cuts are coming or not, and if so, how many? And then of course at the same time is trying to get a gauge or a reading of where inflation is going to be moving forward, especially when it has been a little bit more elevated than usual. So Microsoft down about 2.5% yesterday, NVIDIA rebounding a little bit, Broadcom rebounding a little bit, Tesla very, very strong, up almost 5%. Google here down almost 2%, Meta also selling off a little bit over 10.5%, and then of course Amazon here down over 1.6% as well, although Google was up pre-market significantly. So if you come over, take a look at Google, it was pushing higher, a little bit over 11% as of the time of this video, pre-market hitting a new all-time high at 175.90, which is also, potentially pushing Meta higher. So intraday got bought up as expected, as we did yesterday in our analysis of Meta. And we talked about how there is a possibility that Meta gets bought up here intraday, and of course, 1.4% higher on the day today. Amazon, on the other hand, here also pushing higher, up over 3% pre-market. So very, very strong potential start to the day here. And Microsoft, I believe, also reported earnings. It's up a little bit over 4%, so bouncing higher on the day as well. So the futures are very, very green, 1% higher. QQQs are, so it's possible that we're going to see a very nice potential recovery. But again, we're going to be talking about certain resistance levels because we are most likely going to open at a higher level compared to what we just went over in terms of that resistance. Because from yesterday's close, a 1%, actually 1% is going to put us somewhere around 15,700. So we're still nowhere near close to that resistance, and that's what we are watching from the markets at the moment. And of course, S&P 500, 1% right now is going to be closer to that resistance of 5,100, on the S&P as well. So that is going to be that next target to watch. Volatility here, on the other hand, settling down at 15.6, still higher, 1.4% on the day, but of course, been coming down from highs of 21. That was probably one of the best buying opportunities in recent months because of how high the VIX was. And of course, it gave us a very good potential for buying opportunity here. And of course, the MoneyVest index reading right now is at 3.38. So a little bit of a neutral range, not to be aggressive, not to be not so aggressive either. But of course, just a little bit of nibbling environment here where we can start dollar cost averaging just a little bit back into the market, considering that it is off from its highs of 4 and 4.2, but of course it's nowhere near close to 1.7 to 2 levels, which is exactly what we look for when we are dollar cost averaging more heavily. Ether here consolidating sideways in that range, resistance at 3,700, support at 2,900, and Bitcoin here also consolidating sideways, support level roughly at 61, 62,000, and a resistance all the way up to $72,000 for BTC as well. Crude oil prices continue to see a little bit of a rebound back higher from those levels of $80, $81 a barrel. So that is going to be that support level, and resistance all the way up to $87, $88 a barrel for crude. As we already know, this has been affecting inflation a lot in recent months, and that's why there's been still a little bit of a hotter than expected print on inflation, which is also concerning many market participants. The 10-year treasuries are sitting at just under 4.7, so they continue to of course move higher, and a very, very dreadful level on the markets here is going to be that 5% threshold. I doubt that we're going to get up to that 5% level again, but of course, never rule out anything in the market. Everything is possible, just with different degrees of probabilities, of course. So now going over to the markets, if you go over to the 30-minute time frame, so this is the same exact chart that I went over earlier in the video. And again, you'll notice lower highs and lower lows, huge breakdown, a little bit of a rebound and recovery, resistance at 5,080 to as much as 5,110. And of course, most likely we're going to open around 75 to 90 basis points higher. And that's going to put us somewhere around 5,100, but 5,110. So this right here is going to be still that level for us to wait and see whether we get a breakout above this level or not. I'll most likely go ahead and turn this level into a support because we're most likely going to open higher, and we're going to be gapping up above this support here of 5,080 for the S&P 500. NASDAQ also in a very similar situation. However, we're probably not going to open higher than 15,800. Because compared to the yesterday's close, it would need to be up over 1.8, almost 2% in order for that breakout to happen. So yes, we're going to gap up. We're going to most likely open somewhere around 15,750 to 15,800, right around these levels. And then of course, it's going to be a big question whether we get a breakout intraday or we start to kind of roll over and some profit taking intraday as well. But one thing that I want to mention here in this video, and I want to be very clear on this, is that we are not out of the woods yet. If you believe that this market is now starting to rally once again, please think again, or just think twice before you think that. Primarily because markets move in cycles. They make higher highs and higher lows during an uptrend. They make lower highs and lower lows during a downtrend. And when the markets are in a downtrend and when they are selling off, it can be somewhat eluding or somewhat delusional to think that that lower high or that lower low, whatever the market's kind of rallying off of, is a sign of a trend reversal. It's not until we actually see some positive reversals and breakouts that we can expect the markets to kind of shift back to the upside and of course start making some very nice progress potentially back up to all-time highs. So yes, we're seeing some very nice gains. Intraday, we're seeing some momentum back higher. We're seeing a gap up here on the day, but just want to be very clear that we're not out of the woods yet. We still have a long way to go. Resistance, keep a close eye at 15,870 to 15,900 on the NASDAQ, and of course S&P 500 all the way up to 5,100 to 5,110 on the S&P. Now coming over to Apple here, so ticker symbol AAPL, and Apple on the day, you'll notice is starting to push back higher a little bit, so up over 21 basis points, bouncing off of that support, still trading below those moving averages, still very, very oversold, still kind of makes for a good, decent trade opportunity, but of course even better pricing would be around the 150s for Apple, and again, that next target and resistance stays put at roughly in the 190s for Apple moving forward. Amazon was also pulling back, then it got bought up here very, very nicely, so this right here, a little bit of a higher low for Amazon, so you can see we got bought up here, very nicely, and the next target and resistance is going to be all the way up to 188 to 190 for Amazon as well. So support level is going to stay roughly at 171 for Amazon. So very nice gap up here, a little bit up over 3.4% for Amazon. Tesla had a very nice day yesterday, so pushing up over almost 5%. Pre-markets up another close to 2%, back up to 170s. Next resistance and target is going to be 176. We did pick up a little bit of Tesla here in the 140s, I believe, 140s or 150s. I sent out an alert. So again, that was a good pickup, and resistance is going to stay put roughly in the 176, 177 for Tesla. And again, a breakout beyond that level is actually going to potentially send us to highs of roughly around $199, close to $200 per share for Tesla. So very nice pre-market move of almost 2%, but that next target is going to be closer to 177. So next up on the list is going to be NVIDIA, of course, and NVIDIA yesterday pushing higher up over 3.7, pre-market's up another 2.11% here, and the next resistance and target is going to be closer to $845 with the support level staying put at 740 for NVIDIA as well. But still very much in the context of a downtrend, so want to be very clear that this right here is a lower high and lower low pattern for NVIDIA. And of course, if we do get a breakout beyond this, actually it is very much close to its resistance right now. As you can see, it's at 842. So if we do get a breakout above this, then there is a possibility that we're shifting that trend from lower highs and lower lows to potentially this higher high and higher low pattern. And the next target and resistance is going to be all the way up to 970s for NVIDIA, and this right here, of course, is a resistance also. Talking about advanced micro devices and AMD here, still very much in the context of a downtrend, so lower highs and lower lows, and the next target and next resistance is going to be all the way up to 164. We talked about how there is a pretty significant banker oscillator jumping here on the day, very, very oversold stock to begin with, and the next target and resistance is going to be 164, 165 with a very strong area of support and green demand here for AMD in the 140s, 150s as well. Talking a little bit about PayPal, and PayPal on the day also getting bought up intraday, so green candle on a red day, but resistance is going to stay put at $65 all the way up to $68, $69 per share, and that is going to be a much more important resistance level to keep in mind. The support level at $57, lots of consolidation sideways for PayPal. Talking about Visa, and Visa here also just pulling back from its all-time highs, from highs of 290, it has dropped over 7.7%. Support level is going to stay put at 265, and of course a resistance back up to 290 for Visa as well. Talking about Meta platforms, and Meta here obviously gapping down pretty aggressively, so getting bought up here intraday, so very nice move to the upside, but of course we got a huge resistance to watch for Meta all the way up to 455 to 475 for this company, and all the way up to as much as 520 to 531, and support level is going to stay put at 385 for Meta platforms as well. Talking about Netflix, and Netflix here consolidating sideways, so we got a little bit of a gap down here, and resistance is going to stay put at 596, close to $600, and support level roughly around 536, with of course a huge gap that it also needs to fill eventually. So resistance is going to stay roughly at 596 to close to $600 per share for Netflix. And Google here, on the other hand, with a huge gap up, we got earnings to break down, but bottom line is we got a huge beat on EPS and on revenue as well. Massive gap up here, all-time highs at 176, most likely going to be crossing over $2 trillion in market cap for Google. And support level is going to stay put, of course, down in the 150s for this company. Microsoft also rebounding very nicely, so congratulations to all Microsoft and Google shareholders. And resistance is going to stay put roughly at 417, all the way up to as much as 430. Support level very nicely validated at 394, close to 390s for Microsoft as well. And finally, we got Enphase and Costco. So Enphase here pushing higher 1.6%. Pre-market getting bought up very, very nicely, dropped actually down to $98 before the buyers started stepping in. Intraday up over 11%, during that time. And support levels once again going to stay put in the 106, 105 levels for Enphase, and resistance back up to almost 138 for Enphase. And finally, we come over to Costco, and Costco here consolidating sideways for the most part. Support level is going to stay put roughly around $703. Resistance all the way up to $750. For Costco. Lots of consolidation sideways for this company at the moment. So the bottom line is that we are not out of the woods yet, in my opinion, so just got to be super careful. Yes, this is a very strong rally, but the Money Vest Index, in my opinion, is probably one of the most important metrics to look for. It's a game changer for us because it really tells us when the risk reward is best when you are dollar cost averaging into the market as well. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like, and of course, don't forget to subscribe to the channel. Again, all the alerts are going to be sent out on Discord, all the updates, and everything else is going to be shared. All the members only private videos, including my 30 stock shopping list, as well as my buy targets as well. So links going to be down below. As always, happy investing. I'll see you all in the next video.